Should I start by saying something meaningful?
Can you say anything meaningful?
Fuck, I set myself up for this. I got nothing.
I can wait.
Desire is the root of all suffering.
You going to quote Buddha on that, or are you just going to claim that one as your own?
I was going to quote Naval. Did Buddha say that before Naval?
Yeah.
Oh, well.
I think Naval went with the contract version, and Buddha was just a little more...
The contract? What do you mean the contract version?
Desire is a contract you make with yourself.
Oh, right. He went the law school route.
You get what you want.
Law school route to happiness, yeah.
Like, the business school version.
Yeah.
Ironically,
indeed. It makes sense Buddha said that. That dude, he had bars, you know?
Buddha had bars. He did. He got that shit all figured out.
Yeah, supposedly. I don't know. I'm still pretty convinced he was just unhappy and fat, and he just said all that so the rest of the world would always be convinced that they were never as happy as he was.
I'm pretty sure he was skinny for most of his life. I think he
got fat when he became a...
Yeah. There's a lot more to Buddha than I expected that I'm learning from Joseph Campbell, weirdly. Like the journey and the hunger and the enlightenment it's pretty cool.
I mean, he's like Gandhi, Buddha, Trump. Like the three names that no matter where you are in the world, no matter who you are, you know, for better or for worse.
Oprah.
Obama. These are much better than Trump. I just went with Trump because it was funnier, but
Mother
these
Teresa,
are much more meaningful.
Mandela.
Mother Teresa, though, that's still two names. It's two names.
Bono.
All right. That's
if you had a mononym, what would your mononym be?
My mononym? I don't know if I know what a mononym is. What's a mononym?
It's a person with one name. It's the
a
mononym.
Oh, Jesus Christ. Of course. That's the most obvious thing ever. I think it'd just be Zap.
Yeah.
Yeah.
That's a good one.
Yeah. I walk in the room just like a fucking charge of electricity.
Just like a Shazam lightning bolt tattooed onto your chest.
Yeah. Lightning bolt that points straight down.
Most of them do.
Take that how you will, listeners.
So I've already committed to introducing you in the intro as if Jason Momoa and Larry David had a child that was raised in shared custody by Charlie Munger and Wiz Khalifa. How do you feel about that?
I feel fucking amazing. I feel like I made it. I feel like there's really no going up from here. I feel like this is kind of it. I mean, that's everything I've been striving for in my life.
I tried to endorse you for that on LinkedIn, and it didn't work.
That wasn't, I mean, I guess it's hard to find Khalifa on LinkedIn. The rest of them are probably on there, but yeah. Now I got to find a way to fit venereal disease into this conversation based on the Munger thing.
Love to read Larry David's LinkedIn.
He should have started one for that FTX ad. You know, the FTX ad that he did in the Super Bowl? Yeah. He should have done that.
That would have been exceptional.
I bet I would actually pay to give him access to my LinkedIn to have him update it for me. And just like whatever direction he goes.
Yeah.
I don't think he'd care enough. He'd probably just take the money and walk away. Be like, it's your spite update. Anyway.
All right. Should we work?
I mean, is this work? Getting to talk to you about business on a podcast while we're recording and act like this is work? I mean, sure, yeah,
we're going to pretend like this is work.
All right, let's work then. Let's work. I'll get very serious.
Okay, get serious.
All right.
How would you describe your specific knowledge?
Ooh, interesting. My specific knowledge is, I would describe my specific knowledge as financially oriented and filtered by humans. So I'd say I have accidentally spent 8 years of my life in finance and accidentally learned a shit ton about finance to the degree where I forget most of the things that I know until I end up in a conversation about it. And then they're like, hey, well, how do you handle this side of the balance sheet for, liabilities when it comes to this? And I'm like, oh, well, yeah, yada, yada, yada. And they're like, wait. I have to look around and look behind me and wait, who said that? How did I know this? So
you very slowly just kind of take in knowledge by being in the room over a decade.
Yeah. I mean, being in the room and then also just being in rooms that I shouldn't have been in and then listening to podcasts and everything else, just complete and utter obsession that was spurred by anger and a lot of it, and it still maintains. It's still spurred by anger on a very regular basis.
See, this is the Larry David.
Yeah. Yeah.
Why did you say you ended up in finance accidentally? And why was it spurred by anger?
Well, let's go back to my youth. The anger started when I was young. So my dad went bankrupt when I was a kid, and I grew up in most folks listening to this, I'm guessing, are not in Kansas City, so I'll just say grew up on the rough side of town, I suppose. Kansas City is a very racially divided city. I grew up on the side where people would guess I did not, based on how I look now as a 6'4", 30-year-old white male, but was surrounded by payday loans and check cashing places, and just like saw the insanity that comes along with the American economy, but comes along with being poor in the American economy. Just realizing how friggin' expensive it is to be poor was a thing that I figured out as a kid. But I kind of thought that's what everybody was dealing with, and this is just kind of how the world worked. And like when you get a check on every 2 weeks, you go to the check cashing place and they just take 10% of it, and that's just how life works. Oh, wait, turns out, grow up, that's not how life works at all. That was just a very rough part of town, and how you had to function in that specific geography. So then when I grew up a little bit further, I went and did an internship at Merrill Lynch. My internship at Merrill Lynch pissed me off to the nth degree, where I basically realized there was like one day we went to, I actually tell this story pretty often. There was one day we went to a lunch with this woman who is a wholesaler from SunTrust, because they're known to sell annuities. So I don't think I'm telling any tales out of school, but she came in, said, "Hey, here's an annuity. So, regular cash flow, yada, yada, yada. Oh, and by the way, you can make 3% when you sell this to your clients." It's like, oh, that's interesting. Everything else I had heard about was, 30 basis points, so like 1/10 of that. And we go back to the office, didn't think much of it. It was just another lunch. We go to a lot of lunches, wealth managers. We go back the whole afternoon, the whole next day, the whole rest of the internship. We're selling annuities to everybody. We're selling annuities to 90-year-olds. We're selling annuities to 50-year-olds. We're selling annuities to anybody. And it's not that they all bought them, but it's even just the fact that we brought it up in conversation.
You tried.
Tried. It's like, this is not what they need. And then you realize that a broker dealer, which is what Merrill is, has the ability to take off a hat, which would be the fiduciary hat, which is where you have to act in the best interest of that person, and put on a broker-dealer hat where you can just do something that is suitable for them. Suitable doesn't stand up in court very well most of the time when you actually, like, when the rubber meets the road. So you can pretty much sell anybody anything and make a claim that it's suitable. So anyways, really long-winded version of like the incentives in the financial system are incredibly broken. And I got to see that in college. And then ever since then, that was 8-9 years ago. And anger has driven me every day since.
So you saw at the ripe young age of, 18, 19.
Something like that. I was like a year behind, so like 20. But yeah.
Commission-driven salespeople under the understanding of a fiduciary responsibility and like the guise of a consultative sale. I don't know if predatory is too strong, but certainly an asymmetry of knowledge, selling products that may or may not have been beneficial for people. And then now you've decided to spend your life doing a kamikaze run at the financial industry. From
the inside, from the inside.
You're like Ron Swanson, the libertarian, city manager.
A little bit. Yeah, in a weird way. And I mean, the other thing about it is I think you grow up thinking that there is some utopia to create, right? Like I always thought back when I was doing the Merrill Lynch thing, I was like, this should be perfect. Why isn't this perfect? Why is not every incentive aligned? Why does not everyone function in their own best interest? Why, and then you realize number one, we're all animals and making emotional decisions. And then number two, there's inherently no way that we are going to create a utopian financial system. That's just not capitalism, but it's the best we got.
Yeah.
So yeah, my version of what changing the industry is and my version of success, I think has changed a lot, but my general, as to why I get out of bed and why I kind of have the perspective that I do, it definitely goes back to that. I've hated Robinhood for a really long time before it was cool. I hate sports gambling right now. That's not very cool yet, but give it a couple years, people will fucking hate sports gambling.
Yeah, you can tell sports gambling's fucking stuff up because they're having to start advertising against themselves now. similarly, cigarettes and alcohol do.
And it's very pharma-y.
Yeah.
You know, it's like anytime that you have to put boilerplate on your commercial,
you're selling something that is has potentially more harmful externalities than.
Yeah, it's potentially something that should not be allowed to be on that fucking commercial, you know? And like, I don't know. This is where I get into the utopian versus the realistic, but like I think that it's Fisher Investments is a good example. They spend so much goddamn money on these advertisements. And I think it's really hard for people to figure out, is that legit? Is that not legit? It seems slightly less legit than your Morgan Stanley ad, but maybe the idea of fee only revenue and like it's just so hard to figure out. So in the same way that like, how would I know if I should pick Valtrax or this? Like, how should I know if I pick Fisher or Morgan? Like, no one is educated enough to make these decisions. And then we just go market to them as if they actually know what the hell we're talking about. So anyway,
you said your definition of success has changed after time in the industry. What is it now?
My definition of success in the industry at this point is to just leave it better than I found it when I was born. Okay. And to do that knowing that I had an impact, not just like, I lived 80 years and this thing that used to be absolutely horrible is slightly less horrible. I was on my couch the whole time, but looks good. I'm going to die now. Yeah. But like actually, you know, be able to look back at my career and say, this person wouldn't have been able to afford, you know, all the way to the point of like an individual, they wouldn't have been able to afford this house. This group of people benefited because they went to this technology instead of getting into this payday loan cycle. Things along those lines where if I can just look back and feel like I made a dent on the industry, even like a little dent, because it's a big fucking industry, like I'll feel good about what we did here because it's so freaking big. It's so big. It's everything. And it, as like Web3 and DeFi and everything comes in, like it's literally everything now. Like we're really moving in a direction where everything is finance.
And it is like, I think you have a unique perspective on it because a lot of people I know who are interested in finance kind of like came from a place where they were financially educated in their household.
Yeah.
They came from a place where like the game was understood by the generation before them.
Yeah.
And I mean, that's how I grew up, and I consider myself incredibly lucky to have like been there and, you know, had my dad say like, hey, compounding is really important when I was like 5.
Yeah.
And so like, but I think it's really interesting, you know, that finance has as much and maybe even more impact on the ability to like lift people up than the typical kind of like Ivy League Wall Street approach that is like, hey, like you have to go get in that game because that's where the money is. Mm-hmm. Like this approach, I think is like, you know, financial health is upstream of a lot of other things like physical health and housing and continued employment, and
they're all intercorrelated. And I think finance at the end of the day is the thing. I think a lot of people are like, you know, wealth is health or whatever, or health is wealth, or, you know, whichever direction you want to go with that. But I truly believe that I'm going to fuck this up if I try and make like a really intense statement. I'm going to do it backwards. But I believe the dollar comes before the health, right? I think that if you don't have that dollar, it's really hard to maintain your health. And if you don't have that dollar and you don't have the health, then like what is the rest of life? Like if you don't have your monetary life figured out in the United States, it's pretty damn hard to do anything.
Well, yeah, you end up living in a food desert. You end up buying the cheapest calories you can, which is fast food. You end up
and it's a bank desert too
that then cause greater challenges. Yep. Like, I don't think that's a crazy thing, but I think it's worth saying. Like, most people in finance are not motivated by that vision, or maybe even aware on a first-hand basis of like how important that is, and what sort of impact like even a relatively small improvement in financial health can have for, you know, the bottom 50% of Americans. So.
Oh yeah. I think that most folks that are thinking about finance, especially thinking about it without the lens of technology, are thinking about, you know, compounding, right? Yeah. Like compounding is something that absolutely you need to learn at a young age, but it's almost more of an abundance mindset than a lot of people can handle. You know, I mean, it's great. Yeah. Like absolutely. We should teach kids about compounding at the age of 5, 6, 7, 8, 10, whatever. But also, as you said, if they live in a food desert, that means that they also probably live in a banking desert, which means that probably the only places they get food is the same place they get their money, which is the ATM at the gas store or at the gas station, right? And it's just like, how the fuck do we expect anybody in this country to feel a sense of equality or even feel a sense of like a shot of getting the hell out of the hood if the only way that you can do it is sports or music? Right? Like, it's so, like, I had a conversation last week with this guy he's basically like the connector of dots to like the Rick Rosses of the world and to the OBJs of the world. Like if he's if they're either a really big musician or a really big athlete, this is the guy that's connected to all of them because he manages their money and he's a VC and yada, yada, yada. But he was even having a conversation, just talking with him. He was like, the first thing that he needed to help a lot of these people with is the mindset of it, is like understanding that this money is going to keep coming in, but you can't have a mindset that it's going to keep coming in. Right. Like you have to let go of that like incredible amount of scarcity and believe in the abundance while at the same time not buying a Ferrari, which is like a really hard balance.
And understand that you can put that money to work for you.
Exactly.
Which,
yeah. And it's if you've never had anything, it's so hard not to go buy the dope pair of shoes. Like watching this Kanye documentary right now, like he wasn't kidding when he talks about buying a really, really dope watch before he has a house. Like he wasn't kidding. I always thought it was a joke. He was being serious. But like, that's the only way that you can like display the work that you've done, kind of thing. And I find that so interesting. So anyways, the initial point was like, the only other way that I've seen people get out of the hood is that guy who's just the connector to the athletes and to the musicians. It's like, we have to do something that gives people more of a chance to pull themselves up by their own bootstraps.
And do you think, or has your perspective changed at all about like the ability for finance and finance companies to do that? I feel like the perception, if you ask, who serves underserved banking communities, it's like check cashing places, payday loan places, all with these kind of like super high margins or high, like, I don't know. Do you think ill of those companies that serve underbanked communities? Like, is it possible to have a more, like, do you believe that capitalism can solve that problem? I guess that there is there is a great business to build there that is win-win between customers and businesses. Yeah,
I think totally. I mean, I think it's a really interesting question around the how do I think about the payday loan piece, because I do in most cases. So I think there's a delineation. One, online payday lenders. Like if you've seen the first season of Dirty Money, when they get into the Scott Tucker stuff that happened like 20 blocks that way. That guy's a piece of shit that can rot in hell. That I have no compunction about. Like, you are what's wrong with America. You're what's wrong with the financial ecosystem. You should be in jail. If nothing else, just to show the world the way that we handle that kind of thing. Like, it's not often that I'm like, oh yeah, let's make an example of him. But with that guy, I'm like, let's string him up by his toes and make an example of him. Like, let's go for it. The person that owns the check cashing place down the street from here, that is also a payday lender to some degree, right? And we kind of just put those things together. No, I don't have ill will towards them, because that's the bank in the neighborhood. Like that is just kind of how we've functioned as a society for so long. So no, I don't hold it against them. And actually, if this is something that a lot of people in our industry don't do, but if you actually walked into one of those and you experienced what it was like, when I was a kid, my dad and I used to go in there with him to get his check cashed. People are saying thank you. People aren't like walking in and saying like, here's my check, fuck you. It's like, here's my check, thank you for helping me get this cash so quickly.
Like pawn shops, the same, probably another part of this ecosystem.
It's exactly the same. Totally. There's a lot of pawn shops that do check cashing in the payday loans. It's the same thing. So I don't have ill will against them. Can capitalism solve it with technology? Absolutely. I think we're already seeing that happen in a lot of ways.
Solo funds is a great example.
Solo funds is a great
example. Payday loans, basically.
Peer-to-peer payday loans. There's also a lot of companies.
Way cheaper.
There's also a lot of companies that are working really hard to avoid payday loan regulation. that are doing a much better job than payday loans. So one that I don't feel any compunction talking about publicly because I've done it before is one called Money Lion. So they got SPAC'd in the midst of the Chamath stuff, and it's not worked out great for them. You think you're like, I think I remember.
Is that the one in the UK?
No.
Oh, okay.
No, they're here. I think they at some point thought about expanding, but anyways, they SPAC'd it up and it's not gone well, but they're an amazing model for what a payday loan could look like in a less disgusting fashion, which is basically just like, here's a monthly membership, and that monthly membership is like $12, $10 a month, whatever, right? And then anytime that you need an extra $100 to $200, let us know, right? And because you're paying us, and because we have access to your direct deposit, you're de-risked in a really interesting way. So no, you have $0 fucking dollars in your bank account right now. You should be scared. Yeah. But we have enough history on you to see that you got paid here, here, and here, and based on that, you should get paid here. So sure, here's $200, and just no, there's no interest on it. It's free. Yeah. But you're paying us a monthly membership, right? Yeah. So depending on how quickly that turns over, you can look at that between, it could be 10 to 12% APR, but depending on how long it depends on the situation. Yeah. But that's a much less predatory way of handling it. And it also de-risks for the company a significant way because they have access to direct deposit, and they can pull the cash when it comes in. So
I've seen them get attached to stuff like Stripe or Gusto payroll, predictable payroll things too, for way, way cheaper, because you can underwrite way better than, the guy running a storefront if somebody just walks in. Yeah. So
I mean, flat
those underwriting improvements are meaningful, actually.
Very.
You can offer way cheaper money with more data.
Totally. And it's all, I feel like, on a journey towards that Web3 utopia of streaming money, right? It's just as you do a thing, this tiny drip.
Every day.
Yeah. You get paid every day. You get paid every minute, you get paid every second, you get paid every whatever, microsecond, just keep fucking going. But I mean, that's what we're moving towards, I think. And there's this whole wave of what are called earned wage access companies. EWAs is what they'll get called a lot. And it really is just that. It's like, you earned this money. Your company's payroll system is too old, and your company doesn't have the idea to even give this to you. But here's a corporate benefit. Yeah. And you work this much today. Here's that amount of money. Great. Yeah. We'll just take it out of your payroll in 2 weeks.
Interesting.
Yeah.
So what did you do with all this piss and vinegar you came into the finance industry with? Where'd you jump in? What kind of work have you been up to in these 8 years?
Yeah, it's been a wild 8 years. It's been a wild ride. The first stop that I made with my piss and vinegar was a company called Bloom, which is where you and I met. Yeah. Because your
relationship blossomed.
Yes, it is. It's where the seed planted and where things blossomed. So Bloom is a robo advisor, which is a technical term-ish, I guess. It's not even really a technical term anymore, but robot advisor, right? So advisor, but without the human. Groundbreaking stuff.
We got it. Zach, my audience is pretty sharp. They can do
the
etymology of
robo-advisor.
Okay,
cool. Yeah. I never, when it comes to the depth of the FinTech buzzwords, I never know how much to unpack or, just accept that everybody knows my acronyms. But specifically a robo-advisor in the 401k space. And 401ks are interesting because they're everywhere. So it's not just hey, go set me up an IRA that is held anywhere. It's 401k might be at Fidelity, might be at Principal, might be at, wherever Diet Coke holds theirs, yada, yada, yada. So it was a registered investment advisor that would, through technology, manage these 401ks for anyone across any company anywhere. And that was back when I thought that retirement mattered. So that was funny. But I've basically been on this journey through life of trying to figure out what actually matters in the world of finance. And yeah, of course, if you're making enough money, put the damn money in the 401k and have somebody manage it. Sure. Yeah. But I used to really think this is what matters. Why does no one have any money in their retirement accounts? How is this possible? Yeah. And then from there I moved into banking. And then in banking, I realized it's because nobody has any savings, right? So I worked at a community bank, and I was why would anyone put money in their 401k or IRA if they have $1 in their, emergency savings account, or didn't even know what emergency savings account was. Yeah. Right. And then from there, I can tell you what I did, but basically I've worked through this whole process to trying to figure out what really matters. And it's nothing close to what I thought mattered in the beginning, basically, is the takeaway. Like, basically wasted a lot of time.
So we know a little bit about what doesn't matter. Did you get any closer to finding out what does?
I think so. Do you want me to cut to the punchline?
Tell me what matters.
Regulation. It's the least sexy thing I could have fucking said, but it's true.
It's also highly unfortunate.
It sucks.
That sucks.
It really sucks. I mean, it's like I went from, retirement to your savings matters to, getting people out of debt matters. Debt reconciliation matters. Actually, at the end of the day, the only thing that moves any of this shit is when Washington decides to move any of this shit. Like, that's the only reason people do anything in this world.
Why is regulation what matters?
So the reason the payday loans have been allowed to function the way they've been allowed to function is because of regulation. The reason that earned wage access is being regulated the way it's being regulated right now is because it basically hasn't been regulated. And as we come in and regulate it, it will, I think, improve. Because right now, a lot of people are looking at earned wage access as a loan, as an example, right? It's not really a loan. You did the work. You've earned the money. It's just a matter of ACH is not that good at getting you your money, and your payroll system is not that good at giving you your money. We shouldn't think of that as a loan. You earned the fucking money. Yeah. It doesn't make any sense. So it's a matter of, like, in Washington, getting to the point of actually looking at these things the way they should be looked at, right? Like, there was news last week, whatever, that the NFTs are potentially going to get looked at as collectibles, which will impact, they'll be like a 26, 27% tax rate or something like that for NFTs if they're considered collectibles. That shit matters. If we decide it's a collectible versus an equity versus we've been having this conversation about Bitcoin for so long. Yeah. Who from the Bitcoin world, who from the crypto world has gone and worked in regulation to actually get this fucking thing answered? Like, there's a couple, actually, like the FDIC. There are people that have done that, but not enough. And usually they end up solving their problem through capitalism in the private market, which I fucking respect. But we need more of these folks in Washington. And we also, if you watched people ask questions about Facebook during a Senate testimony, imagine them trying to ask questions about FinTech.
Is there a difference between, like, in technology, it seems more like something happens and then regulation catches up with it.
Completely.
In finance, maybe traditionally it's a little bit more like you can't do anything until the regulation says it's okay. Is that...
I think, yeah, but now those two are starting to cross and intermingle in such a weird way, right? Like, so I won't say the name of the company because I don't know if I'm supposed to or not, but you sent me a thing earlier today of, like, I'm about to hop on with these guys, right? When I saw that, it was like, whatever, a 15% yield on your treasury, on your treasury. Is that what it was? Basically,
on, like, any cash.
So
I think we can, there's no reason we can't say this, I guess.
Go for it.
Stablecoin. No, stable gain.
Stable gain. There, I was going to say, it's not stable coin.
Stable gain, and they are basically a super friendly, like, front end on Anchor protocol currently. So you can take any cash from your checking or savings, whether you're a business or a person, and put it in this friendly kind of front end, like, looks like any normal finance app. Yeah. And on the back end, they will connect it to Anchor, which gets like 20% yield, but you don't have to worry about self-custody, and then you get your 15%.
Yeah. So imagine what you just said. Imagine saying that to a regulator. And I know you haven't, like, met a ton of them, but their response to you would be 1, what? 2, what? 3, what? And 4, that sounds illegal.
Yeah.
Like, how the fuck? What do you mean you're getting me 15% returns no matter what all the time forever? Like, and they might not be full of shit, you know? Like, a lot of these companies are legit and are doing it in a way that if you actually dig into liquidity pools and you dig into why they exist, it's like, oh, okay, well, no wonder. Like, that asset shot through the roof this way, so of course you can do this and that and move this over here, like, whatever. But it should be regulated. Because there's a lot of other, like, if you take what you just described and you expand that kind of aperture out to anyone in the world of Web3 that's doing kind of yield farming oriented stuff. Yeah. I hate to break it to you, but a lot of that shit's illegal or going to be in short order. It's this very, very slippery slope with a lot of it. And I don't want to point anyone, I don't want to point at anyone, but it, like, overarchingly, there's a lot. There's a lot.
You weren't supposed to say that.
I'm sorry. I'm sorry. But this is the only way that world, the only way that Web3 even comes close to living out its potential, in my opinion, is if it's regulated. Like, we have to have that world function inside of the regulatory schema in order for it to actually do what we want it to do.
What is the utopian potential that you see? You're about as well versed as anybody that I know in what the actual old architecture looks like, how it works between the core providers and the ACH system and the community banks, and how the money actually moves and the messes that happen in the back end behind when you write a check or use a credit card. How much of that can change? How much, what does the utopia look like?
I mean, it's a good question. The first thing I would say is the obvious stuff. Money moves faster, right? As soon as money moves faster, the whole world changes. ACH taking 3 days, wires taking however long, and you're just sitting there with your butthole puckered because you're not sure if it's going to get to where it needs to go. No webhooks on anything. We live in such a dystopia right now when it comes to money movement that anything is better. That being said, what?
Definitely had my butthole pucker on some crypto transactions.
Yeah, well, the overlap's strong, right? In terms of moving crypto from one wallet to another.
Yeah,
it feels a lot like sending a wire for an investment. In a lot of, it's just for whatever
Hope
period
I didn't
of
cut
time.
off one of those characters.
Yeah.
Yeah,
it's scary.
It's a long 20 minutes.
It's incredibly scary. So, one, that still needs to even get figured out for Web3, right?
Yeah.
That's on the webhooks don't even necessarily exist there yet. But what I would say is this direction of trustlessness is interesting, but the efficiencies are what really I think is most interesting. And if you think about a mortgage, right? Mortgages, as an example, as of right now, regulatorily, you cannot do a mortgage faster than 2 weeks. You have to. There has to be 2 week process, a 2 week waiting process, basically. And some mortgage companies have gotten so efficient now that they literally just sit there and wait for 2 weeks. When I was at MBKC, the bank I was at a couple times ago, that 2 week wait period was basically just here we are, got to wait for 2 weeks, right? And one of the founders of SoFi went off and founded a company to basically solve this problem through blockchain, because it's just all that you're doing with a mortgage is watching a set of paper go from different division to different division to different division to different division, and then eventually it gets signed off because it got quadruple checked by 8 different people on the same number, but it's 8 people looking at the same number. It's is that the accurate income? Is that this? Is that, right? And you're kind of seeing where I'm leading here, where a smart contract or a set of smart contracts could potentially do everything that we're talking about in, depending on the blockchain, depending on a set of situations, less than 5 minutes. Yeah. I don't know, but maybe even faster if we're depending on what we're talking about. They pull in your income, they verify it, they pull in your previous tax statements. Oh, wait, we actually even get to think about digital identity in Web3, right? So you get to grant permission to your digital identity, and that encompasses pieces of your finance, right? Or pieces of your financial life, I should say. Here you go, Mr. Mortgage Man. Enjoy that, and as soon as you're done with it, let me know your claim, or let me know the rate that you want to give me. Also, I've granted access to 5 other mortgage lenders, and as soon as I pick the one that I want, I'm going to revoke access to all of my private information as soon as I decide. And then, I'm going with you. Okay, click yes. Let me know when it's done. You shouldn't need anything else from me. All I should need to tell you is this is the house I want, and here is who I am. Here's my digital identity. Everything else from there should be filled in.
Instantaneous. And actually, I think the zero knowledge proofs allow for you don't even actually share the private information. All that something separate runs and just says yes or no checks on all that stuff.
Yeah. I mean, to the actual question you asked, you just answered it. I was still semi-answering it in the way that Web 2.5. And I think that's the actual answer is middle of the road.
Yeah. I mean, so I've had it described Jason Hitchcock in one of our first episode was basically I asked the question of where does that 20% yield come from? Like, what happens? And his explanation was basically like, you see all the overhead of every bank ever, every person that's employed, every physical location, every piece of paperwork, every regulatory report, like, it's all smart contracts. And instead of a profit margin, we're just handing it back because it's all one big collaboration between people who are lending and people who are borrowing. And no one wants there to be margin anymore because there is no ownership. There is no like for-profit entity in there. There is only like just push out the value to some combination of the users of the protocol. Is that the utopian version? Like, can you see most of the like finance, or what percent of the finance infrastructure can you see melting away in the face of, you know, smart contracts and blockchain databases and zero knowledge proofs? And
it's an interesting question. I think that we will inevitably stay 20 years behind what we should do. Just as a governmental entity. As
things become technologically possible, it still takes a lot of time to catch up with.
Yeah, exactly. So I mean, what we're describing, and like the mortgage example I used, I think it's called Figure. Do you know the company I'm talking about?
No.
I think it's called Figure. I always want to call it Figma, and I know it's not Figma. It's FIG something, and it's not the fruit. So anyways.
Figment?
No, it's not in my imagination. It's real. Anyway. I think it's Figure. I'll look it up after this. But
if we ever figure it out, we'll put it in the show notes.
That's a figment of your imagination and a figure joke. We're moving through it good. Sorry, Johnny. So that's already happening today. I mean, that exists, right? Yeah. And the reason that he founded the company, and I don't think he talks about it this way publicly, but I'll say it for him. It's so he can have like an employee and $8 billion, right? Like it's, why wouldn't you, right? If you could start this gigantic, like mortgages it's a big fucking world. Yeah. If you could do.
I can't believe the money that gets made in mortgages.
It's unbelievable. It's amazing. It's so unsexy, but it's amazing money.
Yeah.
And if you could do a decent amount of mortgage volume.
Yeah.
In an efficient manner
at a high margin.
Exactly. Yeah. And that's what I mean. It's like just the NBKC mortgage NBKC as a whole, I want to say when I was there was like 350 and the mortgage department was 300.
Wow. Whole big building, lot of people.
Gigantic.
Nice cars in the parking lot.
It was good years in the mortgage market. So yeah, very nice cars in the in the parking lot. Low interest rates in the market.
Whole empty floors in the building.
Yeah, where we got to play.
Yeah.
But it takes so many humans to get a mortgage done.
Yeah.
If you needed half of the humans, much less 1/10, the entire algorithm, the entire conversation about money changes. Mm-hmm. So I think that is really possible throughout the financial system in general.
And back to where we started with the purpose-driven nature of this, like it's not just that the margins get bigger, it's that the margins get bigger and you can offer this for drastically less, which means more and more homes are accessible, which is an increasing problem since the housing prices are increasing. Like a lot more people should be able to get mortgages or get mortgages for more. Well, probably not get mortgages for more. That's its own problem, but yeah.
We've all seen that movie.
Yeah.
Yeah. Ryan Gosling was great. Yeah, I mean, but that's the thing, right? Is like, yes, it does lift people up by their bootstraps and it lowers the barriers to entry in general, which I think is great. But 99% of the time in my experience, it goes towards what you just said, not what we like.
Yeah.
Not the why of the whole conversation we just started. It went towards, oh shit, this exists. How do I start a thing that turns in, like, how do I go start a Ponzi scheme around it or something? You know, it's like humans tend to go the personally beneficial route, which I'm not acting like I don't, but I'm just going to sit here on my soapbox and act like they're worse than me.
And that's humanity.
Yeah, exactly. Exactly.
The constant, re-narrativing to protect the ego.
Yeah. This is 90% of our conversations. We sit in the hot tub.
Yes, and defend our fragile inner selves.
Yeah, and then the one points out to the other one,
that this is happening.
That this is happening,
and that, shit.
Yeah, and then we're just being our fragile little selves, and then anyway.
And then we just try to carry on with our lives as though that didn't happen.
Try to, but yeah.
Okay, do you want to talk about how you just basically like bluffed your way into a paid sabbatical for months?
We can. It's up to you. If you think it's valuable to listeners, I'm happy to cover it.
Look, who doesn't want a like extended paid vacation?
We can cover it
for mental health reasons. I try in these to start with like, what do I think my guest is world class at?
That's where you go.
And I have a number of responses to that in this case that I'm happy to explore, but I think this is one that merits some investigation.
He's world class at getting out of work for 2 months while getting paid.
I don't know a lot of people who have done that.
It was not a conscious effort.
Exactly. It's a gift. It's a gift. And I should, like, I mean, that's a shit version of setting this up, but I do think the more friendly version is that I think of all the people I know, you are one of the few who is happiest in their job. And I think that your career has been like, you spent years unhappy in your jobs. And I think so many people like just like choose to fit the cookie cutter that they end up in. And I think that's like a perfectly reasonable way to go about your life. If you just like got a job in a mortgage center and you're like, I'll just get good at this. And like, that'll be my life. Yeah. And I think it's remarkable that for like 8 years, you were like stubborn enough and determined enough and had a high enough bar to sit there and be like, no, the world will give me a job that I love that lets me serve like this industry the way I want to, and I will just not stop throwing tantrums until it happens. And it turned out beautifully.
I've never thought about it that way, dude. It's actually pretty accurate.
I like genuinely mean it as a compliment too.
Yeah, I know you do. The way you teed it up, I was like, oh god. But now that I actually know what you mean, I get where you're coming from. How did I get to the place of the sabbatical, or like just the whole? I don't really know where to start on that one.
No, I mean, like, I think, I don't know, maybe talk about your like mindset about, because it's really the whole, like, that is one chapter of the whole story of like coming into the industry with piss and vinegar and spending 8 years trying to figure out what mattered, working a ton of different places with a ton of different people and learning all these different things and trying to figure out like how to end up in a high leverage place, work with people that you want to work with, have an actual meaningful impact, and like, and use your talents for good. Yeah. And I mean, I guess choose whatever chapters you want to kind of like tell that story. Yeah. But I think that's a thing that like, I don't know, is sort of like divine and inspired dissatisfaction that like threads you through that whole thing.
That's painfully accurate. I mean, when I look back at like my past, every job that I've had, except for my time at the bank that I keep bringing up, I've kind of left in a huff and left in a bit of a, not even, I mean, I haven't burned any bridges, surprisingly, but I've definitely left in a, y'all motherfuckers can't get your shit together. You know, just
like Larry David leaving a party.
Yeah. But for some reason in my head, I sound like Cat Williams, so it's it's confusing.
That's the Wiz Khalifa part.
That's right. Yeah, there it is. I mean, I guess I have a very strong pain tolerance until I suddenly get to that level of fuckitude where I just know there's no hope, and then I quit. I mean, groundbreaking story, I know. Yeah. But with Bloom as an example, I'm still friends with the people that were the reason that I quit, you know? And like, you and I talk a lot about why I quit. And it just came down to like, I think I was too big for my britches at that point. I was convinced that I knew the direction the company needed to go. And people were like, hey, motherfucker, you too big for your britches. You don't know where this company needs to go. And I was like, I'll show you. I'll quit. Yeah. Right. And it was like, what? But it came from a place of like knowing that I needed to learn something about technology. Right. And Bloom was an amazing company. I got so damn lucky, and I love everybody I worked with there and still like spend time with them. But I would say that the thing that held the company back was being in KC. It's not even a matter of like the founders or who they are as people. It's like, this is a really hard time to find a technical co-founder. And if you don't have a technical co-founder from day one, a business like that, where like, had you built an API 5 years ago to plug in to all of these neobanks that exist today, I think it's a multi-billion-dollar company right now.
Yeah.
Right. But you go into that company 5 years ago and you say, hey, we should build an API. AP what? Like, what's that? Right. And it's like not let's go learn about it and find. It's no, we're building a financial management company. This is how we do it. So I left because I knew there was something I needed to go learn. And then I got to the next company. I learned a shit ton. It was the worst job I've had in my life. It was a year of pure fucking hell where I had to do everything from sell to QA the software that I was developing with outsourced developers everywhere from the Ukraine to Russia to other places where wars are not happening right now. Actually, like Mexico, I had Mexican developers and I think they're safe. And, across South America, everywhere else. But it was terrible. I mean, one, nobody should do all of those jobs. Nobody should sell and do QA. Those are just not the same human. But also, like, it was a year of learning everything from conversation to shipment. Horrible. I think I made $8, but it was worth it because now I can actually talk about it. Quit. Literally watched the Steve Jobs commencement speech about how if you're looking yourself in the mirror and you don't like what you're looking at or what you're getting up to go do, quit your job. I watched that like December 30th and then went in January 1st and quit. I even told him, I was just like, so I watched the Steve Jobs commencement. That's how I explained it. I was like, don't take it personally.
Steve Jobs told me to do this.
Yeah, Steve Jobs told me to do this. So I promise it's a good idea. And all I'm eating is apples. So that it was just, that one was like out of sheer anger. Like that one, I just fucking hated everything that company stood for and I needed to get out of there. But I also knew that I needed to get back in the industry. Like as much, I am very Larry David-y, I guess, in my like, fuck you, I'm getting out of here. But also I know exactly where I'm going next. And actually this is kind of strategic, but I'm going to do it in a bit of a huff.
Yeah.
And then like, give me a month and I'm like, who? I was mad about what? Like, you have to remind me that I was even pissed about half this shit.
Yeah.
And you remember that I was pissed because you dealt with it.
So I'm a good listener.
You're a good listener. This is a good example of that. And then I ended up going to NBKC without I didn't have a job. Like they were just like, yeah, I mean, I guess if you can if you can bring in partners, like maybe we'll consider giving you a job. Mm-hmm. So I quit that development company with nothing. And then I went and built the FinTech portfolio and program for what is today known as like one of the top 20 FinTech banks in the country. And like that was a fucking accident, like that just kind of happened because it kind of happened because I actually had that free time to kind of make that happen. But you remember, I mean,
that was a cool chapter.
It was a cool chapter, but I was also fucking yoked because I was going to the gym twice a day. And like, it was like my priorities were backwards.
That stress manifested itself beautifully.
It did.
Yeah.
It did. But it shouldn't have. Like no rational person, if without a job, would go to the gym more, eat more, and work less. Like it was, but somehow that turned into like exactly what it needed to be.
Yeah.
Because I was taking care of myself or something. It was very bizarre. And then leaving there was like fucking hard because I loved them and that was difficult. So, and then now, we can get into the sabbatical story if you want, but it's, I feel like most of the lessons from the sabbatical story maybe got covered by the story I just told, and then I don't have to throw anybody under a bus for giving me a sabbatical they shouldn't have given me. But maybe that's the lesson. Maybe the lesson here is if you have someone that's trying to leave your company, let them. Do not offer them a sabbatical. And, I mean, there's certain circumstances, but if they've been there 8 months, which I had been at that point, if they have not been there a decade or more, and we're not a instrumental piece of something, maybe just let them go. If somebody wants to leave, maybe let them leave. You don't always have to hold on to everybody, and value your confidence in that instead of the way the market perceives somebody leaving or staying.
Yeah, that's a good way to put it. I think if you are a highly visible employee, you may have more leverage than you think.
That's another good lesson. That's a very good lesson, actually.
If you are a company that's raising money and your suggested use of funds is to give it to an employee who no longer works at your company, that will not be impressive to investors.
It would not. It would not.
Hypothetically.
Hypothetically.
Right. Okay. Money 2020, which is the current employer delivering you this incredible, blissful working experience that you're having.
Indeed. Indeed.
Money 2020, for the uninitiated like me, is it fair to say it's the biggest financial conference in the world?
Yep.
And there's 2 of them.
There's 2 that happen every year. One, and literally my boss from Money 2020 was calling me. I'm making sure nothing was burning.
Zach's just texting his way through this.
Never. I'm making sure that you just said the word. You just said Beetlejuice, so I needed to make sure that Beetlejuice didn't pop up. It's the largest financial conference in the world. Two big ones that happen as of right now. There were more before COVID, but right now it's one that happens in Vegas every year that attracts anywhere from COVID numbers are around 10K, not pre-COVID numbers are anywhere from like 20 to 25K, wow. Something along those lines. The other one's in Amsterdam. It's a slightly smaller venue, so it's 10 to 15K, something like that. Sometimes more this year, I think last year, I should say, with kind of coming out of COVID, it was like 8K or something like that. But anyways, a lot of people come and we do finance stuff.
What's finance stuff? It sounds dumb, but I think it's a fair question. Like, who actually shows up to this thing? Is this like just bankers go? Is this like anybody who's selling to bankers? Is this anybody who sells money? Is this investors? Is this like who shows up? A lot of people have money in the world.
A lot of people.
It's not clear to me what a finance industry even really is or where the boundaries are.
That's actually a really good point. That's something that needs to be defined and has a very, very gray area. So money stuff encompasses Money 2020 is innately a FinTech conference, right? Okay. So the goal of the conference, it was started in 2011. And the goal was to really just kind of pour gas on the fire that was starting to form around FinTech. So coming out of the crisis, obviously the Satoshi white paper was written, but also a lot of people tried to put lipstick on a pig that became neobanks, right? So it's like the old school banking system, but with like a slightly prettier front end that's green and that gives you your, money 2 days early or something like that, hypothetically.
Yeah, Helvetica fonts.
Right, exactly, yeah. We changed the font, we changed the world.
Put it in an app. Yeah.
Change the font, we changed the world. That should be on like Adobe's front door or something. And this whole wave was like starting to form because people just didn't trust the classical financial industry, aka we saw what happened in 08.
Banks didn't build a fucking website either.
That's also true. Also true. The ability to do online banking was actually way less than a lot of people remember or realize. Yeah. So anyways, the conference was started for that. It was pretty small. I think it started with like less than 1,000 people in a room, just like nerding on shit. Mm-hmm. And then over a period of time, it grew and grew and grew. And now it's everything from, investment bankers to venture capitalists to startups to regulators to bankers to like everybody from the JP Morgan, biggest banks in the world, all the way to like, when I was at MBKC, a sub-billion-dollar bank in assets, I went twice. Okay. So I've been 3 times now. This will be my first year working there.
And how did you, just to kind of cap the like, the Larry David employment story, how did that opportunity come to you kind of more from attending and being there? Did it like something else we haven't mentioned yet is your podcast, which is like you're 3 or 4 years into now, for FinTech's sake, which is, I think, definitively the least boring podcast about FinTech that there is.
Thank you for saying that and for specifying the low bar.
And like, in the niche of FinTech is a very big podcast actually. And like, I think on its own right is a cool story about how like deeply niching down can create something super valuable. But did you end up at Money 2020 more because of the podcast or more because of the job? Like, how did that career leap happen?
It's an interesting question. I think, and like not interesting question as I'm thinking about your answer, but interesting question as like it's actually an interesting question because I don't know. Like I'm going to Vegas this week for an on-site before the big thing that we do later in the year. And I want to get a drink with my boss and literally ask her this question. Because she recruited me for a month before I took her seriously. 2 weeks after that before I really considered, and then another 2 weeks before I was like, okay, I need to come to New York and like meet you and like understand that, like feel this.
Yeah.
So she probably spent like 3 months recruiting me. And like, you know me well enough to know that's fucking hilarious. Like,
yeah, that's weird.
It's weird, right?
That's weird.
It's weird.
But also seeing you kind of like tackle this challenge, I've got like, I don't know. It is a pleasure to see you in your natural habitat and like planning a conference and doing work that like, I don't know. Like, I'm glad they recruited you because they're actually like using your full weirdness and eccentricity and energy and imagination to its fullest.
Yeah, that's true.
Do you have a personalized Chappelle hoodie? That is so sick.
Have you never seen this?
No.
Oh yeah,
that's awesome.
Yeah. This is my second one. I lost the first one.
That's amazing.
Yeah.
Okay. Yeah, I think like, I don't know. I'm very excited to see the kind of like crazy shit you brew up for this thing. And when you hear the answer, let me know. I'm excited to find out what it is.
I mean, I have conjecture, and I mean, so the way that I met Scarlett.
But we should say what your job is.
Oh, yeah, good
establish
point.
That context.
Good point. So U.S. content director, meaning I'm in charge of content in the U.S., but what that actually means is that I'm in charge of developing with a team of fucking badasses for the record, but I'm in charge of developing basically the thematic elements for what this year encompasses in the world of finance. That's pretty straightforward, right?
Yep. Obvious.
It's obvious. Like, let's pull out the 3 to 5 most interesting things and most prevalent things in the world of finance right now in the midst of everything in the world. Sure. And make sure that they encompass everything at the same time whilst being incredibly specific. That who is getting on stage, and then also our plans for world domination, I would say, are another big piece of it. So, we do a big road show. We have a lot of digital stuff. Yeah. And in general, we're trying to kind of build things more in a direction of a media company. So that's the other part of my life, is just in the back of my head trying to figure out how to move a really successful, highly profitable events company in a direction not away from the events, but just thinking of the world in a more digital fashion, Yeah.
I mean, let's talk about the events business, like maybe in general and maybe specific to Money 2020, because I think it's a really interesting, like, I feel like events businesses get famously low multiples and are kind of like viewed as extremely fragile, but also produce a ton of cash. Yeah. And can be wildly lucrative. Yeah. So, it's like the one business, you know how they say, like, if you want to make money, don't start a company. Yeah. Like, it's the one exception to that rule, I think, where like, if I was just broke and I knew a lot about one industry, I'd be like, let's do a conference like next week. Yeah. And even if we just get 50 people there, we're going to charge them all $1,000. It's like, it escalates so fast. And if you actually put something decent together, it's very, very lucrative. Well, yeah. I mean, talk us through it.
Well, I think the events industry in general is scary as hell. I think the point of it being unsexy and risky is not untrue, right? Like in 2020, case in point. Points on the board: 1 for COVID, 0 for all other things in the world, including live events, right? Like, it's like, I mean, so if you're hypothetically a business that does 2 events a year, and I won't use actual numbers, but I will say, I mean, Money 2020 does 2 events a year. So that part, the rest of this is made up. 2 events though, I'm telling you the truth. So let's say you make $100 million in a year. 30 million of it is from your second event. 70 is from your first event. You don't get to do either one, right? So whatever. It should have just been 50-50. I made it more confusing than it needed to be. What the fuck do you do?
Yeah, when your revenue goes to 0.
When it goes to 0 and you have nothing but, I mean, you have some variable costs associated with like the venue and this and that, but you have nothing but fixed costs for the most part. Yeah. You have employees, you have all of it's incredibly fucking scary. And if you have not, I mean, Money 2020 was lucky because it was bought by a publicly traded company in London pre any of this. So good valuation, good outcome for everybody, and like had the staying power to get through all of it. But it is incredibly scary to think about what the world looks like if we were living. I mean, until Omicron, like, I think we all were like, well, this is the new normal. All right, we're just going to, I guess I'm going to be checking constantly how I'm supposed to handle the world in every different city that I go to. But I think with 2020 having happened, I think the entire industry is like, okay, cool. Let's just let's harvest what we can harvest, which is a large amount of people coming to one place with fixed costs and some variable costs. And then you harvest you really do just make millions of dollars in like 3 or 4 days.
But it takes a year to
set that up. And if you want to build a event that takes that actually makes $30 million, it takes years to set that up. Like it's an amazing business if you can build like 1,000-person conference that you can set up by yourself with one other person or something like that in like 3 months. Like that's actually a pretty great idea as to how to live your life. You'd probably be pretty happy. There'd probably be a good amount of like balance. But that is not what you do to get to a 30 to 50 to $100 million event, right? Like the other companies that are owned inside of our portfolio is like Cannes Lions, which is like one of the biggest advertising media film festivals in the world. To the point where like, if you get a, lion from Cannes Lion, you actually like get automatically like a 30% pay increase and a multitude of other things in your industry automatically. Right. Awesome. But the other part, there's a lot
award.
Well, we'll check back in a year. The funny part though, is that there was a publicly traded company that in 2020 said that they were nervous about hitting their numbers, not because of COVID, but because of COVID canceling money 2020, because they were like the amount they do like 30 to 40% of their business every year at this event, which is insane. Right. So it's like as much, and this is the interesting part. It's like everybody wants to diversify away from the in-person stuff, but you can't.
Yeah.
It's like you have to have the in-person stuff for the business to actually happen. And like the content's great. And that's what everybody's trying to diversify with is like, how do we become the next Netflix, the next Hulu for finance? It's like, I hope that happens.
Yeah.
But like the actual value of these things isn't in the content. It's in people in back rooms sitting and signing large multi-million-dollar deals.
Yeah. It's taking, the 10,000 of the most powerful and influential people in the world and putting them all in the same city for 5 days.
Exactly. Yeah.
What is can you say the rough order of magnitude of the budget of this event?
In terms of like cost of goods sort of situation. I can say that it's less than the profits.
I wasn't trying to shoot relative. I think it's just like the scale of
well, it's hard because it depends on how you calculate it, right? Yeah. Like if you truly are talking about like venue, things along those lines. Also, Vegas is super expensive. Like something that people don't know about Vegas is that it's, what's it called? Iron workers, when they all get together. Unionized. Thank you. Sorry. Long day. They're unionized. So pretty much to pick a pencil up off the ground, you need things signed in triplicate and you're not allowed to do it yourself. And if you do, then you get fined or something. Right. It's insanity. So a better example would be outside of Vegas. There's a FinTech conference called Lend It that happens in San Francisco. It probably gets like 5,000 people to show up, something like that. It's in a pretty nice spot in a good area. I bet it costs $2 million to put on. And things in Vegas are more expensive, much more expensive.
For reasons.
And you can also, the other thing is like the premium nature of these things is fascinating. Because
it's like a luxury market.
Yeah.
If you go to one conference a year, you have super pricing power.
Exactly. It's like the Louis Vuitton of conferences. It's like, it is, dude. And there's like the sales rack. The sales rack doesn't exist. And tickets are, it depends on the size of your company, but around $3,000 to $4,000 for one person.
Yeah.
And
the attendees are paying you and the sponsors are paying you.
Yeah.
And you got to pay the unions.
Yeah. Exactly. Yeah. But those are in terms of like actually explaining the business, those are the two big inflows. You sell tickets, you sell sponsorships. Put those together, becomes pretty significant. But
it's also like a mini network effect. Like you have 30 years of back history. if people are coming here and doing like 40% of their business for the year, you have massive pricing power, like, and people tend to just go back to the conferences that work, and it's expensive and exclusive to try something else.
Yeah.
If anything, because there's only so much time.
Exactly. The biggest problem is the South by problem, where people just show up and don't buy a ticket. That's the hardest thing for any conference, I think. It's like
interesting.
You just attract all of these people. You create this mini network effect, and then Eric and Bo sit in a fucking, sit
Park
in a
an
van,
RV outside of
RV in a parking lot somewhere.
I've been to South by like 3 times. I've never once had a pass.
That's
I've
what
never
I'm
even
saying.
been into the conference.
That's why I call it the South by problem.
Yeah, I'm your problem.
Well, until this year, because you're coming. But yeah, I call it the South by problem because it's just like the place where it's most visible, but I think it's across the whole industry.
On the other end of the event business spectrum is your little mini event, personal
VSUM.
events business, VSUM. You want to tell me about VSUM?
Sure. Yeah. So VSUM was started. It stands for Value Summit. It was started in the midst of the pandemic between a friend of mine and myself and Jessie, my girlfriend, and it really just started out of like sheer boredom and depression, I would say. For the most part, I was pretty depressed, and Ben, the founder of Dwala, who co-founded it with me, was pretty bored. And Jessie was living
Start
with
of a lot of great things.
It is. And Jessie was living with me, so she was like, "Good Lord, fine, whatever." So yeah, we started it in 2020. The goal was basically just like bring new technology so that Ben was like kind of considering being a VC. He was like, maybe I'll do this, maybe I'll do that. He's like way too good of a person to be a VC. So he didn't do that, but just kidding. I love all of you. So we just wanted to stay close to technology though. So we were like, all right, 3 companies come, they do like a live demo, and then we'll just like talk about shit. And then that turned into those 3 companies. From the first one, like right after we finished, all raised like 20 million plus rounds. It was kind of weird. And then we did the second one, and they all raised like 30 million plus rounds. Like if you actually look back at, we've done 11 or 12 of them now. If you look back, there's like over $1 billion raised in these companies.
Was that the express purpose, or is it just kind of like what
total accident
when you get
total accident,
cool finance companies demoing and 200 investors looking at them?
Yeah,
not even investors.
No, so it's 100 people. Yeah, I should explain more what the event is. I just so much about my life. It's almost like hard to know how much to go into and not. Anyways, and you've been to one. So 100 people or less. The goal from that is 1, so we don't pay for Zoom, and 2, so that this is so funny because we have billionaires in this thing. So we don't pay for Zoom, and to keep the feeling of community tight, right? And yeah, so it opens with an opening, and then we do 2 little what we call Russian roulette intros. So, well, we'll just call them intro roulette because this is connotations now. But basically, just
connotations before.
It's true. Russian roulette intros, and it just tosses you into a room with a random person. You talk to them for 3 minutes, and that happens twice. So off the bat, the quality of people in this 100-person room are always going to be generally pretty high, always pretty interesting, and something always to learn from these people. So you meet 2 new people off the bat like that, takes us 6 minutes. From there, we take you into demos. The demos are each 5 to 10 minutes-ish. So in 15 to 30 minutes, you see 3 new companies, but you don't just see 3 new companies. You see 3 new backends, and you actually see how the APIs function. You see how the product manager either has or hasn't done a good job of setting up the sandbox. You see the ins and outs of everything, which as an investor is really interesting, but as an operator and somebody that doesn't know shit about technology for the most part is really, really interesting, because then you can suddenly talk about it.
And it's a savvy crew. I mean, like the questions
very
that get
savvy
asked
crew
by, there's technical leaders in there who are asking about the tech questions. There's finance people, there's regulators who are like, it's a very,
and that's why it's all off the record. And so so the demos are recorded and they're up on YouTube. So you can go look for VSUM if you want to see the demos that we're talking about, V-Sum. But everything else is totally off the record, to the point where if you do any attribution, I can't. She's so cute.
Focus.
I'm totally focusing. My puppy's just all up in your business. There's a dog running around for those listening. And And everything else from there is off the record, to the point where if there is any attribution, we kick you out of the community. So we do breakout rooms with like a max of 15 people where it's either a subject, right? It's like the Dow tooling, or like, is inflation as bad as we think it is, right? And it's like, that seems like an uninteresting subject potentially to spend an hour out of left field with people you don't know in a room. But when it's this quality person, it's fucking fascinating. It's pretty much impossible not to learn something.
Yeah.
Even if you don't contribute at all, you just sit there silently and you can learn something. But the really interesting part is, to your point, the regulators and the people that normally don't speak openly. Like, it's not crazy to have a crypto bro come out of left field and be like, here's my most inner thoughts. You know, like, that's not like anything that you don't see on the internet every day. That's just Twitter.
Yeah.
But regulators and, like, we have the most successful, not even most successful, most helpful and respected FinTech lawyer in the world that shows up to every goddamn event and contributes and participates in a way that he's just like another one of us.
Yeah.
And I'm still so deferential to this individual that I am like always nervous when I talk to him. And we're not worthy. And that's how I feel every time in it. So I don't know. Anyways, if there's a lesson to be learned, it's do things in private.
Yeah. Which is funny
With
for
smart
somebody
people
who like spends planning a conference, spending so much time like podcasting. But I mean, you and Jesse put on an amazing event. Jesse is really, really good at running, especially digital events.
Yeah.
But yeah, VSUM is incredibly like well produced and high energy, and it's just kind of amazing to like see all of the random experiences that you've had like come together and start to form this vague theme of like high energy, unique, super high value events.
Oh, baby, you okay? Sorry, everybody. I just tried to pick her up and I squeezed her. You okay? And now she's sniffing the microphone. I don't know if you can hear her. Hi. Sorry.
All right. No, I mean, where is there a better place to leave it than just interrupted by puppy cuddles?
Oh, I feel terrible.
Just give us a little wag.
Oh, yeah, she's okay. She's okay. But yeah, I mean, I think if there's a takeaway from any of that, I think it's like you have the public stuff is table stakes. The public stuff, like doing the podcast, if you don't enjoy doing a podcast, don't do a podcast. But if you do, if you are that kind of person, do the public work. Like my podcast is your Twitter account, right? Like you've done some good Twittering, my friend. And it's impressive the reach that you've been able to build on the back of it. But you wouldn't be you, I don't think, if you didn't do like Junto as an example. Like we used to do this like private happy hour dinner series thing that we did together. Saying that to the world, not to you. You know what it is. That I think that's where you get the competitive advantage. Like you have to do the public stuff. That's just required, right? Like and it's fun. That's where all the fun happens. Yeah. But I don't think that your public stuff is good unless if it's informed by the private stuff.
Yeah, there's been a couple times in my career where I've just either been in the right room or the right conversation, and I've been like, there is just nobody who's going to say what you just said from the stage, but it was a life-changing like thing for me to hear. So yeah, I agree with that. You know, we can learn a lot from podcasts. We both have learned a lot from podcasts, but it is not quite the same as like getting in some of those private rooms at the conferences or digitally at VSUM or something like that and hearing some of the off the record stuff that
one of my favorite stories of yours is one of your biggest fuck ups. When
do I have fuck ups?
You have fuck ups when you met Brian Armstrong.
Oh yeah.
Did the listeners know this story?
Probably. I met Brian Armstrong in like 2012 at an Airbnb party because he's an Airbnb alum. Brian Armstrong, the founder of Coinbase.
Oh, he's a YC alum.
No, Airbnb.
He's an Airbnb alum?
Yeah.
He used to work at Airbnb?
Yeah.
What do you do there?
I think he was a developer.
Huh. I didn't mean to put you on the spot. Like, what was his job title?
No,
I just didn't know that.
I could be wrong.
I thought you fucked up and met YC alum because I don't think Coinbase went through YC.
I think they did.
Did they?
Yeah.
Wow, this is getting off the rails.
Yeah, I met Brian Armstrong and he was like explaining Bitcoin to me, and I'd had one or perhaps too many beverages to totally comprehend the magnitude of what he was explaining to me and properly reorient my life around cryptocurrency in the year 2012, which would have had...
Oh, it's 2012!
It was a long time ago, which would have had a meaningful impact on my life. And that's why alcohol is bad for you.
Yes.
And you should never drink it.
Leave it on that public service announcement. That's fucking amazing.
You never know when you're going to meet the next Brian Armstrong, and you're going to be a little too stupid to understand and a little too impatient to wait and a little too forgetful to follow up.
But it's such a good story. I mean, it's so painful, but it's such a good... We were having this conversation yesterday about a potential podcast you were going to do. And it's like, it's so much better to have that personal pain than to have that pain on the behalf of somebody else.
I would just rather have like
$1 billion,
1,000 or 2,000 Bitcoins.
Sure.
And I'm sure you probably understand.
I mean, I would have gone with USD, but yeah, I would convert it quickly into USD. I'm just not a maximalist.
Well, get on board.
I'm a crypto.
2022 is the new
maximalist.
2020, 2012.
All right, sure.
No, I mean that. Whatever is going to be awesome in 2032 is happening in some nascent moment today, and we're just not paying attention.
No,
to it.
yeah, that's true.
Yeah.
That's true.
Yeah.
Yeah, let's go build a DAO.
I'm down.
Yeah.
We must stop that.